Ok, buenas tardes, mi nombre es Manuela y sean bienvenidos a la actividad correspondiente a la semana número 4. En esta ocasión estaré realizando la opción número 2, que consiste en grabar un video leyendo el texto en inglés y sustentándolo en español. Comencemos. Esta lectura es titulada Research on the Robustness of Debt Financing Strategy, a Financial System Engineering Perspective. Listo, ahora sí, continuemos. From the perspective of financial system engineering, financial robustness refers to the ability of financial system that copes with change. Frequently, those factors which lead to changes result in the instability of systematic robustness. In this paper, a quantitative research is conducted to disclose the robustness of debt financing systems and its strategy, based on the goal of business value maximization combined with some key stochastic constraints of financial early warning as well as C-score model, a linear programming analytical model, acronymed as MRDF, is established. Moreover, the numeric solution of the model is figured out by Lingo software. It is concluded that the MRDF framework can help both loaner and debtor business to properly formulate their debt financing strategy to realize their business value, maximization, and prevent financial risks. This study examined the relationship between the capital structure of diversified companies and their diversification degree in different levels of financing constraint. After controlling the firm size, growth power, as well as other variables, which also have great impact on the financing structure decision of the company. We find out from the empirical results that the effects of diversification degree on capital structure are disparate for firms facing different financing constraints. For companies that are extremely terrible solvency condition, the leverage ratio is negatively related to the diversification degree, while for companies that face less debt financing constraint, the leverage is positively related to diversification degree. As an important tool to circumvent the systematic risk in financial engineering, the key for achievement of the performance of stock index futures independent on the determination of edge ratio HR. In this paper, the minimum risk-based portfolio hedging model is first analyzed. It is then followed by the investigation on various major estimation methods for the minimum risk edge ratio, aiming at the newest Shanghai and Shenzhen HS 300 index futures edge. The empirical analysis are eventually performed for the edge strategies. These validating the application of these different estimation methods in China's market. The results revealed in the current study show that HR obtained by the ordinary least squares OLS model is maximal and the out of sample hedging performance is the best. However, the hedging effectiveness is not sufficiently stable for both the out of sample and in sample estimation. In addition, the in sample hedging performance accomplished through the bivariate vector autoregression (VVAR) model is superior to those achieved via other methods. It is manifested further from the results that the HR determined by the error correction (EC) model is the minimal and the hedging performances for both the out of sample and in sample data are weak. Yet, the hedging effectiveness for both of them is stable. Most studies have concentrated on building an accurate credit scoring model to decide whether or not to grant credit to new applicants, and the effort to build more accurate credit scoring model seems to be not significant. In this paper, we proposed a hybrid data mining technique which contains two processing stages. In the clustering stage, the samples of the accepted and new applicants are grouped into homogeneous clusters. The isolated samples are deleted and inconsistent samples are revealed. In the classification stage, support vector machines used samples with new labels to build the scoring model. The difference from the other credit scoring model is that the samples were classified into three or four classes, rather than two, the good and the bad credit classes. Experimental results based on the credit data set provided by a local bank in China showed that by choosing a proper cut-off point, super classification accuracy of the good and the bad credit is obtained. Risk management strategies are developed according to the characteristics of each class. Market efficiency analysis is an important aspect in financial engineering based on weak firm efficient markets hypothesis (EMH). We characterize the market efficiency in foreign exchange (FX) markets by using the multi-scale approximate entropy (MAPEN) to assess the randomness in FX markets. We split 17 daily FX rates from 1984 to 2011 into their periods by two global events: Southeast Asia currency crisis and American subprime crisis. The empirical results indicate that the developed FX market is more efficient than emerging FX markets, and that the financial crisis promotes the market efficiency in FX markets significantly, especially in emerging markets like China, Hong Kong, Korea, and African markets. Ok, listo, esto sería todo por la lectura en inglés. Ahora voy a pasar a sustentar o lo que me pareció más revelante de la lectura. Entonces, para mí, esto fue un estudio realizado con la intención de examinar las empresas diversificadas y su nivel de diversificación. Como resultado de este estudio, se obtuvo que los efectos del grado de diversificación en la estructura capital no son las mismas para las empresas que se enfrentan a diferentes restricciones. Todo esto se obtuvo gracias al control del tamaño, capacidad del crecimiento y más asuntos relacionados con las empresas. Entonces eso también nos permitió ver como la diferencia entre las empresas que se encuentran con un mejor presupuesto para cubrir sus necesidades y las que no tienen como todo esto a favor. Las que tienen para cumplir sus necesidades las pueden cumplir tanto a corto plazo como a largo plazo. Entonces, ¿cuál es la diferencia entre estas? Que a la hora de una que sepa manejar mejor su dinero o algo por el estilo, invierte por parte propia y recibe todas las ganancias. Mientras que los que no tienen tan organizado todo esto, no obtienen las mismas ganancias. De lo contrario, buscan conseguir socios e invertir. Luego de invertir las ganancias que se obtengan, lo que tendrían que hacerlo es dividirlo por partes iguales, ya que si hubo 3 personas que invirtieron, ¿cómo van a ganar 2 y una no? Entonces, a continuación voy a hablar de unos términos que me parecieron importantes y desconocidos a la vez. Entonces, en la lectura hablaban de diversificación. ¿Qué es la diversificación? Es la estrategia que consiste en invertir en diferentes activos para reducir el riesgo de pérdidas y aumentar ganancias. También mencionaban la palabra solvencia, que es la capacidad de una persona o empresa para cumplir sus necesidades financieras, sea a largo o corto plazo. Y apalancamiento, que es la acción de invertir con dinero prestado en lugar del dinero propio. Bueno, eso sería todo por el video correspondiente a esta actividad. Muchísimas gracias, que tengan una feliz tarde.